Africa is home to over 1.5 billion people. It has 60% of the world's uncultivated arable land. It possesses enormous reserves of oil, gold, cobalt, diamonds, lithium, and natural gas. Yet Africa has surprisingly few companies worth even a few $1 million compared to other regions. Why? Why does a continent so rich produce so few giant businesses? Why do so many African startups disappear after only a few years? And why do countries with fewer resources create far more successful companies? Today, we're uncovering the uncomfortable truths behind Africa's business problem. Many people say Africa is one market. It isn't. Africa is actually 54 countries, different currencies, different laws, different taxes, different regulations. A company that succeeds in Nigeria cannot simply copy and paste its business into Kenya. In Europe, businesses can sell across many countries with fewer barriers. In Africa, crossing borders often feels like starting from scratch. Imagine building one company and having to learn 54 different rule books. That's Africa's reality. Business runs on infrastructure, roads, electricity, internet, ports, railways. When these systems fail, companies lose money. Many African businesses spend heavily on generators. Some factories spend more on electricity than on workers. Every extra cost makes products more expensive. Every delay makes companies less competitive. Meanwhile, competitors in Asia enjoy cheaper production costs. The result? African businesses struggle before they even begin. Money is the fuel of business. But getting funding in Africa is difficult. Banks often demand huge collateral. Interest rates can be extremely high. Many entrepreneurs have brilliant ideas. But ideas don't build factories. Money does. In countries like China, governments and banks often support manufacturing. In Africa, entrepreneurs frequently face financing deserts. Without capital, growth becomes impossible. Africa exports what it digs from the ground, but imports what it uses every day. Cocoa leaves Africa. Chocolate returns. Cotton leaves Africa. Finished clothes return. Crude oil leaves Africa. Refined fuel returns. The real profits often come from processing and manufacturing, yet much of that happens elsewhere. Africa supplies the ingredients. Others sell the finished products. Walk through many African markets. You'll find products from China, Turkey, India, Europe. Local manufacturers often struggle to compete. Imported goods can sometimes be cheaper than locally produced items. Consumers naturally choose lower prices. The result is a difficult environment for local companies trying to grow. Every year, thousands of skilled Africans leave. Doctors, engineers, scientists, developers, entrepreneurs. Many seek opportunities abroad. The loss of talent creates a massive challenge. Innovation depends on people. When talent leaves, businesses suffer. Business loves certainty. Investors want predictable environments. Companies want stable policies. Frequent policy changes create uncertainty. Political instability scares investment. Without investment, businesses cannot scale. Without scaling, million-dollar companies remain rare. Despite the obstacles, a new generation is emerging. Young Africans are building businesses, tech startups, agribusiness companies, manufacturing firms, logistics platforms, fintech giants. Across the continent, entrepreneurs are proving that success is possible. They're solving African problems with African solutions, and some are becoming global players. Africa doesn't lack talent. It doesn't lack resources. It doesn't lack ambition. What it lacks are the systems that help businesses scale. The future may depend on one question. Can Africa move from exporting raw materials to exporting billion-dollar companies? The answer could shape the next century. What do you think? Let us know in the comments below. If you enjoyed this documentary, subscribe for more stories shaping Africa's future. Until the next Untold African story, stay curious.